I hope you're doing well. We'll continue with our series of using price action to analyze indexes and then eventually stocks. The index that I have today for assessment is the Nifty FMCG index, and the time frame that I have set is the monthly. And the objective of setting up this index on the monthly is to establish a directional bias. By directional bias, I mean, do I want to trade this security only on the long side, or do I want to trade this security only on the short side, or do I want to deploy both long and short strategies on the security? And of course, the fourth option being that I do not want to trade this security at all. So let's see let's see what the specifics of the price action present to us, and how we use this information to create our own inference and our own plan on how to approach the Nifty FMCG index for the months and weeks ahead. So without ambiguity, obviously when we are using price action, and if I set this up for quite some time, we can see a steady uptrend. So there is no doubt that the FMCG index in general has been quite bullish for the investors of the country. That is, the investors of the country have been rewarded. And the portion where I have highlighted now is obviously the higher top. It was the all-time high, indicating that this has a long bias, a very strong long bias. Now the question is, what about the bottoms? So we know that any uptrend is a higher top, higher bottom. But when we look at the current low, we can see that this current low is created at a spot which was tested 2 years ago. In other words, if a security is going to trade back where it traded 2 years ago, this cannot be a higher bottom. That is where the cursor is marked at the moment, this one. This cannot be a higher bottom. This has to be at least a double bottom, the area marked on the black line. Now we have a security which has created a higher top and a double bottom, and we know that an uptrend is higher top, higher bottom, which means it is not meeting the criteria of an uptrend. Similarly, a downtrend is lower top, lower bottom, and we do not see a lower top, lower bottom either. It is interesting to note, however, that if we extend this, for example, I'll just color this black, and I'll make it a little dark for now, or darker maybe. So just have a look at the black line. Now obviously if this becomes the price action to follow, it's consolidating here and followed up with this low, then we have a clear cut lower top, lower bottom formation. But there's nowhere close to this. The price is obviously here. This is not a lower top, lower bottom. That is only going to be identified based on the market's behavior around 50,000 level. In other words, it's not a strong downtrend, it's not a strong uptrend. It looks like it's in a range, and the bias of the range is on the long side because of the higher top which was created in the past. Which means that if a range creates a double bottom, it is very much in the nature of the range to also go and create a double top. At the moment, obviously, we are not seeing a double top, but it is very much in the nature of a security like this to create a double top and a double bottom. So given the above, I would view this as a ranging index with a long bias. So I would prefer to be on the long side of this particular index rather than on the downside. That is, I would prefer to make the statement that it is more likely that the index is going to create a double top than it is to create a lower bottom. Alright, that is, the lower bottom was the case we discussed earlier. So it looks like that because of the formation of a higher top that was created obviously in the month of September, October 24, before the entire market actually corrected. So with this view and with this assessment of trading it in a range with a long bias, we move to the weekly charts. And on the weekly charts, we are seeing this black line which will behave like a neckline, obviously making it a strong region of support. It is obvious, but this is happening at 50,000 levels. The index is currently trading at 56,000, 57,000 levels. So we are still looking at almost a 10 to 15% correction on the index for it to come to the black line. In other words, it is obvious that this black line is a strong support, but the question is it relevant to the price action that we are looking to trade? So my view is that instead of this line, or I'll just leave this one unchanged as it was. I'll simply select another ray, for example a horizontal ray. I just feel that perhaps better is to play with this low I mean, simply because it has been a low for a significant amount of time. This is the weekly chart, of course. So we are seeing this in place since the month of May, June, and we are obviously in the months of September. So it has been in play for about 2 to 3 months. It's a strong enough low for a trader, a short-term trader. So we are seeing the index at 56,900 and 54,300 seems to be a low that could be in place. So obviously we have identified the low. Now we will just try and see if we can identify any kind of a bullish pattern. Why? Because our bias is on the long side. And if we look at this particular structure, so I'll just try and take a trend line. And if we look at this structure at the moment, this structure too looks like the chart that we discussed earlier on the Nifty FMCG, on the Nifty Pharma, where we were seeing an inverted head and shoulders get formed. So this looks like a very similar kind of a structure, that it is bullish on the monthly, it gets corrected and forms a range. After that it gets into a bullish range, and within that range, starting from let's say 2024 October till now, almost a year, a full year, it has formed an inverted head and shoulders, which of course we know is a bullish reversal pattern. And we can clearly see that the line on the top of it is approximately 60,000, the low is approximately 50,000, and the breakout is happening at near 58,000. So obviously we would give it a target of 67,000, which is pretty much aligned with what our assessment was earlier, that what has created a double bottom can actually go and create a double top, which is right here, 67,000. In other words, this particular index looks pretty primed to break the neckline, and if it does, it gets at a logical target of approximately 67,000 at the spot level. It's currently at 57,000, and the stop loss will obviously be 54,000. So translated, it will be a roughly 3,000 point SL, approximately 2,500 point SL for a 10,000 point target. And the reason why we look at trading through price action, look at trading patterns like this, like an inverted head and shoulder or W pattern and things like that, is because unlike candlestick patterns, they actually give us certain targets which are usually larger than the required stop losses. So even if they have a low accuracy, or if they frizzle out somewhere, for example, the price does break out, reaches 61 but comes back, we still are in play actually. So that's the reason why certain patterns are preferred over another. And candlesticks etc. are simply used to say ki this looks like a low, but it doesn't give us any extended target. So coming back to this, we can see the formation of an inverted head and shoulders. We obviously zooming into the price action more closely, and then we extend this assessment finally to our daily time frame, which will be the actionable time frame. So we will see how our assessments on the weekly have come. We will obviously see this formation of a saucer which failed, right? You can clearly see that in the month of February, March, it formed a good rounding bottom saucer which failed. Approximately 30 to 40% of the saucer became the low, which is what you're looking at. You will see a lot of textbooks calling it a wedge. For example, if I simply reduce the length of this line from here and say, for example, bring it somewhere here, right? And I just bring this here and zoom in further. This will look like a wedge. But our assessments are leading from a longer duration, and we can clearly see that. And in today's price action, what the index has actually done is it has sort of closed above the resistance line, and the pivotal resistance is maybe just another 100, 200, 300 points away. So the FMCG index looks like that on the daily time frames, it looks like it is going to give a confirmation for the inverted head and shoulders. And as and when it does give a confirmation for the inverted head and shoulders that we had discussed, which was coming out of the weekly charts right here, we would know that if the price reaches somewhere here, our stop loss will be at 54,500 or whatever levels we are seeing. I mean, it's just after the breakout, we will trail the stop, and yeah, it looks like a logical trade. So we have a pattern target on FMCG, and we can also see that this is more like a ranging security as compared to the Nifty Auto or the Nifty Pharma. And just as a recap, for example, if I place the Pharma index on the weekly, you will see that it is also sort of forming an inverted head and shoulders, but it is happening pretty close to the all-time high. So the risk is that it might break out from there. And if we look at Nifty Auto, we will also see that it has sort of already given that breakout, the breakout that we are seeing in these other indexes. It has already given that inverted head and shoulder or a saucer breakout on the weekly. So the auto is a case where the breakout has happened. The pharma and FMCG are cases where the breakout could happen. So with that, we not only have we concluded the assessment, seen the price action, we have also been able to rank through memory various indexes. I hope this video was useful to you in some way. I wish you the best for the remainder of the week.